For more on the Bank of England's policy conundrum, I'm joined by Todd Elmer, head of G10 Forex Asia strategy, Forex strategy Asia ex-Japan at Citigroup Global Markets. Got there in the end, Todd. Todd, hi, thanks for joining us.
Oh, it's my pleasure.
Todd, is the Bank of England at risk of losing its credibility?
Well, I think it's a bit premature to say that they've lost credibility at this stage, but that risk is out there. Certainly, inflation is high. It's been high for a while. There does appear to be evidence of a pickup in inflation expectations, and ultimately, we think that means that they need to tighten rates sooner rather than later to help restore some credibility or protect their future credibility.
How soon do you think they should then raise interest rates, and how many rate hikes should be implemented this year?
Citi's expectation is that the rate hikes kick off in the second or third quarter. We have seen a bit of a stampede in that direction in terms of market pricing recently, so that's more or less consistent with what is discounted. We certainly don't think that they're going to go today, which means that we won't see a statement from the Bank of England, so it probably isn't going to be a big event. The bigger event is going to be, of course, the inflation report, at which some of this hawkishness may come through.
What are the implications then for sterling going forward?
I have to say we think that sterling is well positioned at this stage. Broadly speaking, there are two factors which have been lending it support. The first is we saw a relatively early move towards fiscal consolidation that makes sterling an attractive alternative to the euro. And the second is we've seen this build up in terms of interest rate expectations. We don't think that the positive impact of either of those factors has really run its course as of yet. So we would look for some increased sterling outperformance moving forward. Certainly short euro sterling we think is an attractive trade at this point.
Elsewhere, we've got everyone focusing, Todd, on what's happening within the Eurozone, specifically in light of Axel Weber's decision to step down from the Bundesbank, which ruled him out then of the running for the next ECB president. What are the implications of that with regards to likelihood of rate hikes? Because, of course, he was seen as a rather hawkish member of the ECB.
Oh, you're right. He's by far the most outspoken hawk on the ECB. So on the margin, this probably reduces the likelihood of more aggressive rate rises moving forward. And it really comes in the midst of a string of negative developments for the Eurozone. We haven't seen much progress towards their agreements on the bailout packages. And we're seeing interest rate spreads move slightly against the Eurozone. But I think what's most interesting is that this hasn't really done much to undercut the value of the euro. And I think what that's telling us is that the market is simply not positioned overly long the euro right now, and that they're treating dips as opportunities to buy. So we do think that the short-term risk remains weighted in favor of a stronger euro, despite the news that Weber will not be in contention for the top job at the ECB.
Todd, thanks a lot. Todd Elmer there from Citigroup Global Markets, speaking to us live from Singapore.